hit show. Album available now.
Here's Tim, who's in Waterloo with a question. Go ahead, sir.
Hi, David. Thanks for taking the call. Pursuant to your reply on Baytex, somewhere around the end of February, I sold all of my oils with the idea I would buy them back in, say, mid-July at a lower price, and that was Cenovus, Crescent Point, Baytex, Freehold Royalty, and AltaGas.
Well, good for you. Good sell.
However, they've gone down fairly substantially, although there may still be a way to go. I'm wondering if you think I should start to nibble now, say 25, 30%, or do you think I should just simply wait and perhaps start to buy a little later?
Sure.
Thanks very much.
So, Tim, we use some tools that I'll call breadth models that track the percentage of stocks within a universe that are in long-term price advances. And we use those to help us find entry points. When we find that over time fewer and fewer stocks are holding up in price, a group may be getting sold out. What I found in general is when you get into a significant decline, you're better to let things settle out, find a low, and even rally a little bit before entering, as opposed to trying to pick a bottom. In general, you know, if it's just a short-term pullback, you know, it can work out quite well. The problem is, you know, we're in a market where there are some bigger risks, and it's not impossible you get a more significant decline. So it depends on the way you invest. If you're not unhappy buying something and seeing it go down another 20%, you know, go ahead. That's not my approach. I prefer to see some change in the market before we start to put positions on. And the risk in a falling market is it's not the first month or two of a decline that gets you. It's month 5, 6, 7, and 8 when the liquidity disappears and really things fall out of bed. I think you want to be a little bit careful. There's a lot of parts of the market right now that are really breaking down, and I think that there is some downside risk here. So I think you probably could wait. Certainly May doesn't tend to be the best time to be buying energy. If you're looking seasonally, you want to wait later in the year.
And is it your experience for a retail investor waiting like that for a stock that's falling is sometimes difficult to do in terms of discipline and controlling the emotions? It
is, but you know, and you're going to get lots of 1- and 2-day rallies. You know, I mean, for instance, gold's had a nice bounce today. You know, I'm not convinced that you saw a low in those things. They are sold out and they could have a little bounce, but I'd like to see more evidence of that before I'd put money to work. Mm-hmm. I'm the same way in the energy space. Right. So really net, we've actually, you know, we've been a little short of energy in our various mandates that we run, and we continue to be. I think you're probably just a little bit early. I'd wait a little longer. Okay, David, you mentioned gold. Let's talk silver here. Here's Harris in Toronto. Hi there, Harris.
Hello, gentlemen. Thanks for taking my call.
You're welcome.
Dave, I just wanted to tell me what you know about Silver Wheaton.
Sure.
Do you think the price is right to buy it? Are they producers? And what's the market cap? And if you have any price on it, like a year price.
Okay.
If you.
All right, thanks, Harris. We've got a market cap of $8.8 billion.
Yeah, so Harris, what you're buying if you buy Silver Wheaton really is a company that gets royalties on revenue. And so it's an interesting company because it doesn't have some of the risks of some producers. You know, the stock's come down from 40, it's 25. You know, the golds have really been under pressure. Some would say that the price of gold has really broken some important support levels, and there could be additional downside. Again, like the oil, I don't like to step in front of a freight train. If we're going to get a real turn, you're going to have time to put some positions on because they're not going to bottom on a Tuesday and be headed straight up on a Thursday. So I think you've got time to go. Now, what I would suggest you do, and Silver Wheaton is a good company, but I would suggest looking at all of the producers and saying, who is it that's producing, who's meeting expectations in production? Who is it that has lots of capital on the balance sheet that can sustain a sustained decline? Who is it that has growth? And frankly, if I were going to look for a gold stock right now, I'd probably look at Yamana and in the precious metals because they got lots of cash. They've got their production goes up about 50% over the next 5 years. They have been hitting all their production targets. That's one that I like. And technically, it's holding in much better than the group. And the market will tell you who the leader is. And that's I think, one of the leaders. So I'd be more interested in watching the Yamana than the Silver Wheaton, but they're both good companies. Just don't think it's time to buy the precious metals yet.
All right, David. Apple is down 17% since its intraday high on April 10th. Here's Steve in Thunder Bay who wants to know more about Apple. Go ahead, Steve.
Thank you for taking my call.
Sure.
If you showed the financials to any analyst with the name covered up and 10 taken off, I think everybody would be saying it's a screaming buy. I'd like to know your opinion.
Sure. So, Steve, you're absolutely right. It's a wonderful company, trading at 10 times earnings. It's not expensive. They have shown, a wonderful ability to execute and manage the growth in the business. It appears that there's lots of growth. So that's one side. The other side is that when companies wind up widely held, if there's any hiccup at all in the story, it can have an impact on share price. I think the issue that you're facing right now in Apple is two things. In the very near term, you're likely to see a slowdown in iPhone sales because you've got the new iPhone coming. People are going to hold back. So the question is, how much impact will that have? The second thing is that really for the first time in a few years, the balance of power seems to be shifting a little bit between Apple and the telecom service providers. You've heard a couple of the service providers say, we're expecting to have slower handset sales because we're not going to give as many subsidies for people who want to renew and upgrade to new devices.
Right.
So that's great for the service providers because that costs them a lot of money and probably just reduces a little bit the expectations for iPhone sales. So this is a widely held stock. It's really well liked, but it is owned by everybody. If you're in a tougher market, you're going to see a little bit of money come off the table. So I think that's one you want to watch and you want to be prepared to buy, but maybe just not yet.
Have you held this before?
Oh, yeah. We owned it at $16 in 2003.
Yeah, but not right now.
But we're out of the stock currently.
Okay. All right, David, let's take a short break here. We'll come right back and we'll have a look at those past picks of yours.